The market had a wild and rough week. How's it setting up for next week? Let's take a look at the charts to see what exactly is going on and what we might be able to do about it. So we'll kick things off with SPY. There we go. And the things that we're looking for here. Now, this is the daily chart, SPY 1 day. We closed down below the 13, the 50, and the 5. That 13 crossing down over the 50 isn't great. So today, a little bit of a recovery after that big old red candle day. Usually, this follows with a further sell. We need to get on top of that 50 EMA, certainly at least get on top of that 5, which we got rejected at. Again, didn't even quite make it up to that 50-day EMA. So kind of a nice day today. See the little bit of recovery in there. When we go to the Qs, which out of the 3 ETFs that I'm covering, which track the stock market, so Q for the SPY is S&P 500's ETF, the Qs, NASDAQ 100 ETF, and IWM Russell 2000. The Qs is the least performant out of those, and that's a little bit telling for us. It is tech heavy, and I think we see a little bit of recovery, but a little bit of hesitance to move away from those tech and kind of find some other areas where there might be some values. So I'll show you some of the underdog stocks that I have been talking about, especially my number 1 pick I think is going to do very well for us in Q4, especially there's a high potential in the near future that we see a little bit of recovery for a very beaten down stock. So we'll get to that one in just a little bit. We'll do a little bit of a teaser for you. So the Qs up about 0.75%, whereas the SPY was up 1%. And like I said, I think some of that movement away, that de-risking away from tech, just a little bit kind of broadening out, finding where that we can find a little bit more return. Sometimes one of the best ways for especially the larger institutions to get that return is to move out of, at least sell, if not short, some of the bigger names that have been outperforming over time. And when they start to get rich to a point and hit certain technical levels, the institutions seem to like to let go of those and diversify a little bit away, move a little bit away from them. Certainly a day like yesterday's triggered some of those stop losses and caused people to have a little bit of fear and panic in there. And what we're watching for is that 13 isn't going to cross down over the 50. If it does, we could see a further sell from here. IWM having about a 3% recovery, and also just some wild volume between yesterday and today going along with it. This could actually turn out to be a bullish thing. We actually closed up above the 5 EMA, which is unique out of these 3 ETFs, as it actually did close above its 5-day moving average. It did get rejected at the 13, which is very typical when you just overtake the 5, which, mind you, we've had trouble with the 5 EMA ever since November the 12th. We actually recovered it on November 11th, lost it again on, actually, well, I guess we closed above it on the 12th. We lost it in a big way on the 13th. And you can see that IWM has been underperforming, generally speaking, what we've had versus the Qs and the SPY. So this is moving into those small caps. With a volume like that, off a bottom like this usually pushes higher. So what I'm talking about for next week, we definitely want to watch SPY and QQQ, see what they do around the moving averages. They're signaling that there could be some sideways movement, or maybe it could push down a little bit. We'll have to see. IWM at the 3 of them is showing the best opportunity for further advancement next week. So we'll watch for that Thanksgiving week. We'll see what goes on. So hopefully your family's all setting up for that Thanksgiving if you're here in the United States. And then also on Friday, that Black Friday, usually that's a good day for the market. So that could actually be pretty darn good for us. So strong movement today, 2.83%, almost triple what the SPY put out and almost quadruple what the Qs put out. So to see that sort of movement on that sort of volume, this could continue. We need to get back up above that 50 EMA as well. And the number that we're looking for, we want to break above 239. It's basically the peak of this candle right here. We want to see those prices go higher, especially up above that 13 EMA. Even better if we go up above the 50. If we do that, we have room until at least 242 before we run into this previous peak that we have over here, which happens to be at 242.35. If we're able to clear 242.35, then we actually have that next peak about 246. So this might not be a straight climb if we get it, but it could still be a very good thing for us. So IWM, that's my pick out of the 3 of them for next week for the best potential for bullishness, especially if we start to see that movement into some of the more beat up stocks, such as the Russell 2000 stocks, and away from the ones like big tech that have been absolutely going bonkers and wild. Now, mind you, Google having that 3% today, they could probably put on another 4-ish% or so, 4 to 6% before they start to turn around from where they're at right now. We'll see if they can break that $300 barrier. So Bitcoin, I said about an interesting spot. I showed you these rays if you watched my previous videos. If not, here's the monthly chart. There's my bargain bin prices, by the way. and I talked about these rays that have been very, very good at predicting where we're going to see the different important pivots happening. And if we drop back down to the daily chart, you can see that we actually touched this most recent pivot, and we actually got good volume off the bottom. This could be like a volume bomb, especially off the oversold territory, the oversold status. We could see some recovery in crypto. We got the 5 EMA and the 13 EMA to hit our heads on. So we have those to test for resistance. Up above that is this other ray. Happens to be about 96,000. So breaking up above 96,000, sitting on top of that ray is going to be critical support for us. And it all starts with what we see with the moving averages. Lots of big volume, especially off this tail here. If we drop down to an hourly chart, you can see a little bit more where that volume started to coming in. And the biggest volume that we have over the last 24 hours happens to be at the 7 a.m. hour as we were riding along. Look at this. Look how beautiful that is. Now, all these closing candles that you see, whether they opened or they closed. So here where we closed, here where we opened, there is a low price. We opened just above this. Look at that support that it's riding on. As soon as we push down below that ray, man, the buyers came in and pushed it right back up. And now on an hourly basis, what are we looking for? A break of that 50-hour EMA. So we'll see if we hit our heads. I think the daily chart is going to be a good indicator for a day-to-day sense for how things are going right now. Looking decent on an hourly basis, but that's hours at a time. This is going to be days at a time versus a weekly chart, which would be weeks at a time and so on. The next hurdles that we have to get through, we have got to see ourselves making it back over this 5. Rejection, 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 rejection. This sounds like my high school dating experience, or at least the attempt thereof to have one. All those rejections all along the way. The 5 EMA is that first critical step on the daily chart to show us that we really are starting to turn things around. This candle right here is very promising, especially bouncing off such a critical ray of support that we could start to see a push back again the other way. Now into some of the penny stocks, then we'll get into the underdogs. NVTS, I wanted to show you the monthly chart on this because we tagged the 50-month EMA. The 13 could cross over if we can get that recovery. And certainly we had that selling pressure before up at this area. And then we had that blast off month of October up 86%. And then we've given back about 44% throughout the month of November so far. Lots of de-risking, finding support right where we fought and all that resistance before. This is a critical zone for us. If we drop to the weekly chart, we are north of the 200 week, which is overall bullish, but we are down below the 5 and the 13, which can still show near-term bearishness. The RSI is sitting right near 50. Super critical that we hold support. The 200-day EMA, we were just, man, like a cent or two up above that. So 681, and we bottomed out today at, where's that price? $6.85. So within 4 cents of that 200-day EMA. Long wick on that. Not the best signs of accumulation in terms of the volume. A little bit better than it was some of these other days, but we definitely could find some support here. I think the penny stocks might be a little bit too risky, but we'll see what happens. This is a good start. Once again, sort of like I said for Bitcoin, getting on top of that 5 EMA off after all those rejections is going to be a huge win for us. We broke up above it yesterday, but couldn't hold it. So that's not resistance broken. That's resistance upheld, and further evidence that we're rejecting off the 13 as well. So NVTS, if we can make it up above the peak of this previous candle, especially with that long bottom wick, that would be up above the 5, and we need to hold that and close above it, and then we can start facing that 13. So BBAI, once again, look at this. As soon as we push down below the 200 EMA, bought it back up, long bottom wick on this thing. And right now the volumes aren't doing a whole lot. I mean, they're slightly elevated. We could be seeing some signs of accumulation. It's certainly nothing like we saw back in here following their earnings in that very subdued area, if you will. But still signs that they're kicking around some ideas, especially with the government shutdown ended. Is that big, beautiful bill money going to start coming their way? Is it going to start splashing over? Honestly, between now and January, we could have that answer. So that sets us up for like a 2-month window for Big Bear AI to watch and see what happens with the prices and watch those near-term moving averages, because we did get rejected off this green 5 EMA. Man, such a problem for us, but it is all near-term stuff. Near-term, got to get back on top of it. If these moving averages, the 5, 13, 50, if they start crossing down over the 200, that could show further bearishness. And if the price action continues below the 200, as we did close below it, that would switch over into an overall bearish sentiment from a daily basis for Big Bear AI. And that doesn't necessarily help us out with trying to find that positive price action. So we have reasons to be hopeful, but we got to really take that 200 EMA and then got to deal with that 5 that's just north of it. So ONDS, pardon me here. starting to lose my voice, I think. Uh-oh. I have a sick toddler, and I think she passed it to me. So we'll find out. Man, we just got just a tangle of moving averages when we look at ONDS, and that's not necessarily great for finding a clear signal when they all tangle together like this one. But when we look at the price action, that long bottom wick like we saw in so many other charts today, still got rejected at the 5 EMA. We want to ride on top of that. ONDS definitely has that potential to push back the other way. And when we zoom out on this thing, we actually had a descending wedge pattern on ONDS. So I know I got a little bit of extra mess on there for you. Let me take it down so we can really see what's going on. There we go. You can see we broke out above it. We made that move and we got rejected. I think I have my rectangle right here. There we go. You can see the resistance we got rejected off of, but so far finding support above this previous low, it is critical if we push back up there, and we could, especially if we can retake that 50 and that 5 and stay above the 13, we could retest that. If we're going to go higher than 831, we got to sit on top of 831 as support. We're still up above the 200. We still have elevated volumes. I think the punch is still going on at the party for ONDS. And then RZLV, man, look at this. A little bit earlier, but same formation with what we have for RZLV like we did with ONDS. So far, fighting with that 5 EMA, really got a big old rejection off this trend line yesterday. Got to fight back up above that. Got to hold the 5, got to take the 13. And we did break out of this descending wedge pattern, which is a bullish reversal pattern. And we did retest support, and we upheld support on that pattern itself. Those moving averages are going to be trouble. We're coming off oversold territory for RZLV. This one, I think, could really start blasting off. It's showing just ever so slightly signs of further excitement here. So maybe a little bit further of a sell coming in here. And if we drop down to an hourly chart to see how the volume broke down from yesterday, that biggest volume, let's go 30 minutes so we can see if that was pre-market or if that was market hours. There we go. And you can see that the most volume, the biggest volume that we got was that push up and then hit resistance right at that trend line that I showed you when we were more zoomed in on the chart. There we go. So we got to break that trend line resistance to the north. That's really going to help us out for moving further north for RZLV. I still think that this is definitely one of the best penny stocks, best penny stocks to buy now. It's been a long week. Happy Friday, everybody. Let's get into those underdogs. So at the bottom of the list, we got Nike, and I do want to update this list. So they almost, in terms of percent changes, went in order that I have them ranked. So Nike at the bottom of the underdogs that I have picked out for this one, 62.80, up $2.23 today. And some near-term evidence, we have a slightly higher low than we did before, but we're still getting rejected at the 13 EMA. We're fighting to take that 5, and it looks like, let me see, 62.61, and we closed at 62.80. So we actually did overtake the 5 EMA. That 13 is next. Look at the two rejections that we got on that yellow 13 on Nike. We absolutely need to break up above that. Going to Under Armour. Under Armour is underperforming, and man, they're under that 5 EMA. They're solidly in bearish territory. I feel like Under Armour has the opportunity to turn things around. We're seeing signs of accumulation with that volume picking up. We need the RSI to go with it, and we need to start sitting on top of those moving averages. Look at the rejections on the 13. Watching all those rejections happen, anytime we get north or start to dabble with the 13, we get kicked right back down. So the big thing we're looking for is when we start to hold on to that 13, and especially looking for that volume support. Crocs also underperforming, but man, oh man, look when they tagged that double bottom with what's over here. Looking like maybe a range-bound trade could be taking place. RSI going north of 50, and you'll notice the charts are getting a little bit better each time. We actually have the 5 and the 13 EMA. We have the bullish crossover. We're testing out the 50 EMA. Crocs, it could be a big one for next week. And matter of fact, it could be big for Q4 out of my underdogs stocks that I have. Trade Desk. This one I think I'm going to bump down below Crocs because Crocs just looks so much better from a chart perspective. Trade Desk still dangling off that 5 EMA. Got to overtake it. It's coming off oversold. We just don't have that evidence yet that it's time to turn things around. And then finally, Chipotle, best performer out of the bunch, up 4.22% today following those earnings. And holy woof, Batman. We've overtaken the 5. We messed with the 13 yesterday, got rejected, closed down below the 5, retook the 5, and also tested out the 13, got rejected so far. But Chipotle is still, honestly, it's one of my top Q4 picks. I think that this thing has gotten beaten up. I think it's taken its lumps, and I think it's ready to outperform. Even if it doesn't fully return to bullishness, I still think it has that potential to push back up and at least retest this previous peak that we have this previous trough that we have over here, this low point that we have around $38, giving us about $7 per share, giving us potentially 20% upside over Q4 after getting beat up and coming off that oversold status that it's had over time. So Chipotle, I'm gunning for you. I'm running for you, and I really hope that that you can turn things around. And you are my top underdog Q4 pick, officially announced here. So you guys can let me know what you think and go what's going on in the markets. Are we seeing that broadening out, that diversification away from big tech into some of the other more beat up areas? I think that we are. And I also think that if big tech is going to continue to sell down, or if the market's going to continue to sell down, I don't think that it's going to be an entire Q4 sell down. I think we see the broadening out. I think that the value goes away in the underperforming areas, that they get girded up, they get brought up, and then they get traded off for the companies that have been performing instead throughout Q4. That's a typical flow how I can see this going, that the safe plays end up getting chosen after they get de-risked a little bit. NVIDIA being probably one of the safest ones from a perspective of a company that's just been year after year over the past several years, especially with the AI space, has been returning. And so for that to sell off as much as it has, especially with the excellent guidance that it's given, excellent results that it's given, I think we're just seeing that movement, bringing some of the value back before it gets picked up again and probably ends up north of 200 again before the year's end. But we'll see what the market brings to us. We're going to play the charts as they come along. And if you guys want to join us over at the Discord, I've joined teams with Stockmo. You can check out that Discord. There's a whole panel of experts over there. You guys can get supported in your journey towards financial freedom and building alpha in your portfolio when you join that Discord. And this 3-day free trial, I believe, is still active. And if you want to learn to do technical analysis like you see here, and if you also want to learn how to trade using those technicals, if you want to learn about trading with options, you can get access to all of that through the link for Stockmo Academy. Click on that, sign up, use the code word doctor. It's going to save you $400 off each course. If you do the bundle, you can get that $400 discount with code word doctor, but you'll also get the bundle discount on top of it. Guys, I'm going to let you go before I porky pig it any more time. That's all, folks. Thanks for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.